The task of our group is to reevaluate the profitability of New Zealand banks include, first, to discuss whether New Zealand banks, especially the four major banks of Australia and New Zealand, have a monopoly position and use market power to obtain excess profit. Second is about the competitiveness of the banking industry. If the banking industry in New Zealand earns excess profit, how to enhance the competitiveness of banking sector? Is it a solution for the government to split the big bank?
In fact, the four largest banks in New Zealand, NZ, BNZ, ASB, and Westpac, are referred to as the large New Zealand banks. Other much smaller banks in the country include Kiwibank, Rabobank, TSB, SBS, and Heartland Bank. About 84% of all assets owned by banks with New Zealand registration and held by the four major New Zealand banks, as shown in Figure 1. The major four banks have had persistently elevated levels of profitability compared to the rest of the banking sector, mirrored by return on equity and return on assets. This means that the four major banks are more profitable than other small banks.
As shown in Figure 2, the four major banks are also relatively more profitable than key international comparators, and Reserve Bank analysis for the period 2016 to 2022 found the large New Zealand bank's return on common equity was generally the second highest of the comparative group after Canada. As shown in Figure 3, the big four banks have lower expense ratios. Those banks' lower costs may be due to economies of scale in comparison to the small New Zealand banks, and cost savings derived from being the subsidiary of a larger banking group. The lower expense ratio also confirms the ability of the four major banks to earn excess profits. According to the previous analysis, we have two findings. First, the four major banks dominate the banking sector in New Zealand, and the banking market is monopolized. Second, the profitability of the four major banks is significantly stronger, earning excess profits.
Next, we will discuss ways to enhance the competitiveness of the banking sector, either by implementing open banking or breaking up the big banks. With the implementation of open banks, the government has announced the initiative to boost bank competition and provide better terms for New Zealanders. In order to guarantee that New Zealanders have access to a larger range of goods and services that better suits their needs, the government committed to establish a consumer data framework. The data frame would impose requirements on data holders such as banks. The New Zealanders will find it simpler to compare mortgage rates, apply for loans, and switch banks thanks to open banking. With insurance, bank must reveal consumer information upon request.
To increase competition in the banking business, anti-monopoly activist Tex Edwards has urged the Commerce Commission to be brave and suggest the government split up NZ and ASB. As mentioned in our previous analysis, New Zealand's banking sector is dominated by the four largest banks. The four major banks took advantage of their monopoly position and asset scale to obtain excess profits, therefore weakening the market power of the big four banks can enhance competitiveness and allow more small banks to participate in the competition. Therefore, we think breaking up the big banks is a viable option. Thank you for watching.